your concerns.
Senator Crapo.
Thank you very much, Mr. Chairman. And Secretary Geithner, I want to shift gears with you a little bit. As you know, we have the financial regulatory reform legislation on the Senate floor as we are holding this hearing, and I'd like to take this opportunity to ask you a couple of questions about that legislation as we are dealing with it now on the Senate floor. It's already been pointed out here in the committee, in this hearing, that the bank tax that you're proposing here does not apply to Fannie and Freddie, and neither does the bill on the floor of the Senate. And my question is this. The public really has focused a lot on taxpayer bailouts, of banks, automakers, and insurance companies, and you can go through the scale of the support that has been provided there, and nowhere has the support been higher than with Fannie and Freddie. I think that right now we are looking at estimates that ultimately they will cost the taxpayer about $381 billion, if I'm looking at the most recent estimates, and that estimate may be too optimistic. And so of all of the bailouts that we're dealing with, the problem with Fannie and Freddie seems to not only have been at the core of where we started this entire problem, but is also at the height of the cost to the American taxpayer. And yet last Christmas Eve, Treasury announced that it was lifting the $400 billion cap on losses, and we see basically nothing but the full faith and credit of the U.S. taxpayer there backing Fannie and Freddie, and yet it is not included in the legislation that's on the floor of the Senate. Could you tell me why?
Senator, you're exactly right. We made a choice, given the complexity of the reform challenge ahead, that we would not move immediately to propose broad reforms of our housing finance system, including the future of Fannie and Freddie. We decided to do this in two stages. We did that because we thought, frankly, we'd get a better outcome, a more thoughtful effort, more commitment to reform if we were further ahead in the process of repairing the damage to the housing markets. But we've begun a process. We laid out broad principles and objectives. We're conducting congressional hearings. We're soliciting public comment on alternative proposals. And we look forward to working with you on trying to put in place a set of strong reforms that will fix what is broken in our housing finance market. And it's not just Fannie and Freddie, of course. As you know, we do a lot of things in the housing market which we need to reassess. Many of those things contributed to making this crisis work.
Like the mortgage origination process?
There's as you know, and you've made a lot of thoughtful comments to this process in the past, there are a range of things we're going to have to change in that process. This bill does do the necessary essential things and not just cause the crisis, but would leave us vulnerable in the future, and does include some important changes on the securitization front, which are helpful. But you're absolutely right, it doesn't, and we did not attempt to take on that broader challenge now because we thought fundamentally we get a better outcome, more support, more consensus for ambitious reforms if we were further along in repairing the very damaged housing markets.
I understand your rationale. I don't agree. I believe we should be dealing with it now, and I'd love to spend further time with you in terms of how we would approach it when we get to that point. But let me just ask another couple of quick questions here, still focusing on the financial regulatory reform bill. According to news reports, FDIC Chairman Sheila Bair has urged lawmakers to scrap Section 716 of that bill, which would force banks to spin off their derivatives businesses. Her argument is that could destabilize banks and drive risk into unregulated parts of the financial sector. And her letter echoed fears that were recently raised by Federal Reserve officials as well, who have, in an unsigned memo, indicated that that provision would impair financial stability and be highly disruptive and costly to banks and their customers. Could you comment on whether you agree with Sheila Bair and the Federal Reserve officials who were reported on?
Senator, I want to start by emphasizing that the package of reforms that relate to the derivatives market in the bill crafted by Chairman Dodd and Chairman Lincoln is a sweeping, very strong, comprehensive set of reforms. They would bring standardized products onto clearinghouses. They would force centrally cleared products to be traded on either an exchange or an electronic trading platform. They would provide authority to put capital and margin requirements on major swap participants. They would give transparency and disclosure to a market that operated largely in the dark. It would give tools to the SEC and the CFTC to police and deter fraud and manipulation in these markets. This is the most comprehensive, sweeping reform. It's a revolution for the derivatives markets for the country as a whole, and we strongly support a bill that incorporates a comprehensive set of protections, oversight over these markets going forward. Now, as you know, Senator Dodd and Senator Lincoln are now working through this provision, and they're considering how to deal with concerns raised by Chairman Baer, by Chairman Bernanke, and by members of the Senate, the concerns you expressed in your opening statement. And I know they're working carefully on how best to accommodate those concerns.
But you are not expressing your opinion on that today?
We have not taken a position on that specific provision now, but Senator, I would like to emphasize the following basic strategy that's underpinned this reform process. To make the system more stable, you need to make sure that we are doing a better job of limiting risk-taking by core institutions that are so important in these markets. You would not make the system more stable by taking functions that are integral and central to banking and separating and putting them somewhere else. That will create a less stable system, a more unstable system, and that basic theory, that basic strategy underpins the entire approach that Chairman Dodd, Chairman Lincoln, and their counterparts in the House have brought to this important set of reforms.
Senator Enzi.
Thank you, Mr. Chairman.